Many investors like to buy stocks and then just stay passive, not challenging anything a company does. But not CalSTRS. It is the world's largest educator-only pension fund with more than $318 billion under management. And the California-based company says it is going to become more vocal and more active when it comes to the companies it invests in, especially around the issues of ESG, environmental, social, and governance. Aisha Mastagni is the CalSTRS portfolio manager leading that charge, and we had a chance to speak with her about their plan and whether this means actually selling stocks of companies that don't meet their goals.
We're not divesting of these companies. We like to have a seat at the table. And so what we're doing is we're escalating our votes against directors at those companies that aren't disclosing important information for us as investors. So first, it's around companies that don't have any diversity on their boards. And it's at companies where they're not disclosing what we consider the very minimal types of metrics that we need when it comes to climate risk. You know, CalSTRS made a pledge to net zero for our own portfolio. And so we need the companies that we invest in to really start disclosing important metrics. And those metrics, yep.
No, I was going to say, so you will continue, XYZ, fake company, you will own shares of XYZ, but if they're not giving the disclosures that you want, if they don't have 30% of their board as female, or if they're failing on other ESG metrics, you will then, is launching a proxy attack too strong of a term?
That might be a bit strong, but I think what we're doing is we're escalating our proxy votes. We as investors, one of the most powerful tools we have is to support or reject those directors that represent our interest inside the boardroom. And so we're voting against entire boards, for example, that don't meet our diversity minimums. And we're voting against entire boards that aren't disclosing the basic information we need when it comes to climate risk disclosure.
Now you're doing the good work from your seat at the table as one of the biggest institutional funds in the world. But your core job is also to make sure you return the return of and the return on capital of the teachers and the pensions that you serve. Are there metrics that show that companies that follow these types of ESG or other diversity initiatives, that they actually do either outperform or at least it does not damage their performance in any way? It's still a great investment is the point.
Absolutely. I mean, there are countless academic studies that show that companies that have diverse boards perform better, they make better decisions, they manage risk better. And so diversity, I'm so glad that this argument about whether diversity adds value, we've kind of gotten past that argument. And now it's really about how do you onboard new members and how do we do it more quickly? Because we're making progress, but the World Economic Forum, their 2020 gender gap report came out, and it said it will take 257 years to reach global gender parity at the rate we're going right now. And we don't have that time to wait. We need our companies to move much faster, which is why we made this aggressive decision to start voting against those directors that can't meet that minimum.
Yeah, I don't know about you, Aisha. I do not have 257 years. Maybe 256, maybe 256. I can't let you go without asking about the macro environment. Wow. I mean, we've talked to Chris Ailman, your CIO, a number of times, but since the last time we spoke with you guys, everything's changed. I mean, interest rates have gone up, 30 to 50%. Inflation remains hotter. The market looked wobbly. We've got a war in Southern Europe. How do you see the macro investing and economic environment right now?
So I'm gonna take a quote from our CIO, Chris Ailman, since you mentioned him. At CalSTRS, our liabilities are 50, 100 years in the future. So it's a marathon. It's not a sprint. So we're not looking at things on a quarter by quarter basis, but it's exactly why things like diversity and climate risk are so important to our portfolio, because we don't want to simply sell out of a company because it's not performing this quarter. We're in this for the long haul. And so we need companies to appropriately manage these risks that we think are long-term risks, because that's how we're going to better manage the portfolio. And that's how we're going to pay the benefits for the teachers of California.